Welcome to Skytech-Lens. A historic shift in the global energy landscape began with the quiet departure of a massive ship. In July 2025, the tanker Gaslog Glasgow left the LNG Canada terminal in Kitimat, British Columbia, bound for South Korea with liquefied natural gas. This marked Canada's first direct natural gas shipment to Asia, bypassing American pipelines and ports. It symbolized a multi-billion-dollar strategy for Canada to become a global energy player. The $40 billion LNG Canada project, the largest in the nation's history, was operational. The Coastal GasLink pipeline, a 400-mile steel artery, delivered the gas. This shipment made the dream of exporting Canadian gas beyond the U.S. a reality. It was a declaration of economic sovereignty, proving Canada could reach Asian markets directly. The world was watching and the message was clear: Canada was now a global player. While a minor technical issue delayed a second shipment, the core achievement remained. Canada had unlocked its Pacific gateway, offering a superior route to Asia. This new era sent shockwaves through energy markets and boardrooms across the U.S. A new era had begun. To grasp Canada's recent move, we must examine its energy history with the U.S. For nearly a century, Canada was deeply tied to the U.S. as its primary energy customer. 97% of Canadian energy exports flowed south, creating a powerful dependency. Canadian producers had little choice but to sell into the U.S. market, often at a discount. Prices were dictated by American standards, making Canadian companies price takers. This dependency extended into politics, with American decisions impacting Canadian energy. The Keystone XL pipeline saga highlighted Canada's vulnerability to U.S. policy. American refineries benefited from a reliable supply, keeping U.S. fuel prices stable. For Canada, this stifled growth and innovation, with energy wealth landlocked. Without global market access, there was little incentive to build coastal infrastructure. Canada's energy potential was constrained by its only customer. The recent pivot marks a significant shift from this historical dependency. Every major shift has a catalyst, and for Canada, it was aggressive U.S. trade policy. In August 2025, former President Trump imposed tariffs on Canadian exports, aiming to assert dominance. Instead of submission, the tariffs ignited Canadian resolve. The move highlighted the strategic liability of relying on the U.S. market. Prime Minister Mark Carney's government responded with determination, not retaliation. The tariffs made Pacific Coast pipelines a national priority. Projects like the Trans Mountain Pipeline expansion and LNG Canada became urgent. The U.S. measures provided political cover to overcome domestic opposition. The message was clear: Canada couldn't afford to be held hostage by another nation. The tariffs, meant to leash Canada, instead cut it free. This episode altered Canadian energy psychology, making diversification the only path. The U.S. overplayed its hand, pushing Canada toward independence. Canada built a new path, breaking free from American control. Canada's new energy strategy was built on engineering feats, not rhetoric. The Trans Mountain Pipeline expansion and LNG Canada terminal are pillars of this era. These projects rewired North America's energy map, creating new routes to the Pacific. The Trans Mountain Pipeline expansion tripled capacity, providing access to Pacific tankers. Canadian oil producers can now reach premium-paying Asian customers. The LNG Canada facility, a $40 billion mega project, unlocks Canada's natural gas reserves. These projects overcame immense challenges, showcasing Canadian ingenuity. They are gateways to a new economic reality, allowing Canada to control its energy destiny. Canada's pivot hinges on Asia's soaring demand for stable energy. Asian nations, especially China, Japan, and South Korea, seize the opportunity. Canada offers a politically stable, independent supplier, free from U.S. pressures. This led to a dramatic reorientation of Canadian energy exports toward Asia. China became the largest buyer of Canadian crude from the Pacific coast. Asian refineries seek long-term supplies of Canadian heavy crude. Long-term LNG contracts were signed before the first shipment left. Asian buyers seeking supply security locked in multi-decade agreements. This diversification is a win-win for Canada and its Asian partners. Canada benefits from higher prices and a boost to its economy. Asian countries gain a dependable energy source, reducing reliance on the Middle East. A new energy axis is forming between Canada and Asia. Geography and mutual interest drive this powerful partnership. Canada's geographic advantage over the U.S. translates into significant savings. New trade routes across the Pacific are more efficient, driving market shifts. An LNG tanker from British Columbia reaches Asia in 11 days. A U.S. Gulf Coast tanker takes 40 days via the Panama Canal. This time, difference allows faster, more reliable supply chains for Asian customers. Shipping costs from British Columbia to Asia are under $1 per million BTU. From the US Gulf Coast, costs are $2, $3 per million BTU. Canadian LNG arrives cheaper, offering a competitive edge. Asian buyers eagerly sign long-term contracts for Canadian supply. Canada's geographic advantage is a permanent economic benefit. Canada's new energy strategy defies US economic gravity. Direct trade routes to Asia alter Canada's relationship with the US. This shift reduces American leverage over Canadian energy policy. Canada is now a sovereign nation with options, not a supplicant. The calm response to US tariffs shows newfound independence. The US is losing its influence over Canada. Canada gains a buffer against American political cycles. Multi-decade contracts with Asian partners provide stability. Canada is moving out of America's economic shadow. It is stepping into the global sunlight. Canada's pivot creates ripple effects across the US-American industries reliant on Canadian energy face uncertainty. Midwest refineries, designed for Canadian crude, are vulnerable. Re-engineering refineries would be costly and time-consuming. US pipelines and storage facilities risk becoming obsolete. Planned pipeline projects stall as business cases evaporate. American energy companies lose market share and influence. Reduced Canadian crude supply could raise US gasoline prices. The US loses its position as the primary North American energy hub. The assumption of endless Canadian supply is shattered. The consequences are painful and prolonged. Canada's energy moves herald its arrival as a global power. Breaking free from continental constraints, Canada alters trade flows. Long-term LNG contracts with Asia provide a stable alternative. Canada becomes a secure partner for energy-reliant nations. European nations negotiate for future LNG supplies from Canada. The AECO price discount disappears as Canada accesses global markets. Canada becomes a price maker, boosting its economy. Canada's journey is a case study in economic sovereignty. The US learns that economic pressure can backfire. Canada changes the game, proving new powers can rise. Thanks for watching and subscribe the channel Skytech-Lens for more updates. Thanks.